Ladies and gentlemen, the stock market is a bitch. It is a curmudgeoning, cranky little bitch. That its only designation is a tool for trickery, and I hope you guys were prepared. If we go back to yesterday's stock market betterings, if you haven't seen it, I challenge you to watch it from yesterday. We talked specifically in that video of a couple of things, but number one issue was do not sleep on this market. I would not be surprised if it tried to pull a fast one on it like we did last time right before the Fed meeting. We'll go into depth in that here for just a second. Some people come to me and they'll ask me, hey, what was this light bulb moment that went off? What was this little secret sauce or indicator or whatever it was that you might have come up with that made you a successful trader after being a loser for so many years? The truth is start thinking opposite of what the market does. While all these people are selling you programs of technical analysis and megaphone patterns and other kinds of garbage, none of that matters, man. Because the market always does what people are not thinking. What a classic trick move today. Market moving down underneath a support, selling off most of the day, and then what does it do right at the end of the day? It does it every time. You gotta love it. I hope you guys are prepared for it. If not, down in the description box, you can follow me and trade with me live, because this is why I hate making predictions about stuff. You just never know. So let's talk a little bit about what we have here, where we're going, and a couple of different angles. I did talk yesterday about the possibilities of seeing a little bit of a flush once we moved underneath of, let's get to the drawing here. Once we moved underneath of this 4130. And I tell you what, when you see the intraday action, I got a 5-minute chart up top here. That's what happened. As soon as 4130 went, you had a little bit of consolidation here midday, but once that went, you started to see that selling take place. Now, there was something about this selling here that was a little bit different. Normally, when a market breaks a significant pivotal level and moves below a level it hasn't been the entire year, you should see a little bit more panic. And when I'm talking about panic, for those that are learning a little bit more about chart patterns, sort of a waterfall. You're looking for some really aggressive dropping in the asset that you're trading. This was more of a grind and a meltdown, reaching 40.56. Not really a stout level as far as market technician levels are concerned. But you get this ridiculous launch right off of it from 40.60 to 41.44. I mean, that's damn near 100 points. I mean, it's not like we haven't seen this recently. You had this the other day in a bear market. So if some of you are trading through bear markets, first of all, remember this. It's much harder to short in bear markets than it is bull markets, because these rallies or these squeezes that get going can be ridiculous. I mean, we talked about them last week and some of the stuff like ZM and Docu. We can look at those stocks again today. But there's been several occasions in this market where it has rallied 100 points in a single day from the bottom to its top range. We've also seen an 11% rally when we looked at the daily chart. Let's go back. I highlighted this yesterday as well. You had a 6% rally here coming off of this waterfall formation. You had another 6% rally here, and then this one was 11. So these things can rally. Now, where do we go from here? Because this was a total sucker rally. You even had crap running like Zoom Video, Docu, Peloton. Peloton. Like, what are people buying Peloton for on a day like today, man? But anyway, let's talk about this tomorrow. This is what happened last time. I did highlight this again. I want to go over it for everybody so they're prepared as the week progresses. This was on a Tuesday right here. This is exactly what happened pre-Fed. I'm going to put PF. This was pre-Fed. This rally starts, and this was actually the Fed day, was rallying into the Fed meeting. Again, now when you think about it, I want you to go back there and put yourself into that position, because I understand it gets me sometimes too. That's why I call the market a bitch. Because when you're down here, everyone's thinking short. And you're thinking, who in their right mind would want to long a market when you're at support, you've been breaking down, you continue to make low after low every day, you're on a 3-day skid here, and you've got this all-important Fed meeting coming up. Why would anybody be dumb enough to long it? Well, they do. And then it turns around and it runs the actual day. So by the time the Fed speaks on Wednesday, this thing has already rallied from 4,100 to 4,250, 4,300, just an asinine amount. And most people are left with chasing. Now, in this case, if you chased, you got away with it. In this case, you did not, or in this case, you did not. But that's typically what markets like to do. I'm not saying that's what we have here, but again, here comes the market, pin barring, wicking, whatever you want to call it, right off the bottom. The belligerent stubbornness, if you block out the noise, can't get this thing under 4,100 to stick right now, but we'll see what happens. Now, maybe this sell-off, one way to look at it is it could be already priced in. Like that's what the sell-off would be with a 0.5 point rate increase from the Fed. We'll see if this is able to build tomorrow. And I wouldn't rule out another 6%er back up to 43.50. In this type of environment, nonetheless, this is why I hate making predictions. You have to be so nimble. The stuff that was working, and I don't mean to be mean, but for the newer traders out there, that shit that you were pulling last year, the year before that made you some money, this is what everybody was talking about. It doesn't always work. You have to be nimble. You have to be prepared. You have to be ready. And you have to just drop your biases and say, this is the way that it is. And that's my rant for a second. Now, let's move on to some names. Some of these junky ones kind of ran. I'm sorry I'm using the word junk. I'm not necessarily saying they're crappy companies that are committing fraud. But some of these have been on the schneid, riding the bench for a while. One is PayPal. Pay poop, you got to call it now. This is not a bad chart pattern. But I think in order for this one to work, you're going to need help for the market. You're going to need a little lift out of the market. You're going to need something happening here to get the juices flowing. But if you move up above 93s to 94s here, but let me open up this chart so you guys can see what I'm talking about. So I'm just not telling you what I'm looking at. If you can get above this pin bar here, this wick, I think this is a pretty good trade along here, stop down in here at a potential target of 105. Just a thought right now. I'm not saying I'm going to take that one here. This one doesn't look too bad. Spot, I don't know. I mean, the same thing here. Again, this was up $7. I don't know what people were buying. It's already broken that range. I don't think I'm interested in this one. I wouldn't rule out that if they did get away, some of these might be pretty good shorts. Then you've got Roku. Basically anything Cathie Wood owns, right, is in the hole. Another one here, maybe. There's a lot of these charts that look like it. You can put Netflix in here. Sorry to be scanning through these so quickly. A little bit more interested in this one. I think this one's due for a squeeze. We actually, here's a repetitive chart pattern for you guys, so I just don't talk in circles. I want to show you what I mean here. With this Netflix, let me open up this chart. Sorry, hold on for just 1 second. Okay, if you look at this right here, you had this earnings gap down followed by a few days worth of consolidation, a moment to digest what had just happened. If you look, as soon as this thing breaks range of 400, there was a squeeze here. It wasn't a lot, but there was 2-day shelf life of a squeeze that almost took you to about 450. So that's nothing to laugh at. That was almost a $50 rally. Since then, it's fallen apart. But maybe, just maybe, you get the same thing. You're consolidating after this sell-off. If you can move above this, it would be 190, say 200 this time. Hey, maybe 250 is up there. You know, that gap is really close. This trade makes a lot of sense to me. But again, I think you need to see a little bit more market participation, because just as you cannot trust rallies, you can't trust sell-offs either. There's just a lot of mistrust in this market. So keep those right there. Let's move on to the world of pennies. If you go back to yesterday's video, like how I'm always referring to yesterday's video. If you go back to that, what was that thing we were talking about? What was it? Baru. I'll be damned, huh? I'll be damned. What a smoke out today. And I tell you what, I don't think this is over with. I think you have a lot more room down to 6, aided by, I think it was, look, this Culver. Who was it here? Culper Research releases a short report on the stock. Here's what I got to say. Screw Culper Research. Doug told you to short this thing last week. We had the penny pound in this thing over a week ago. We don't need Culper. Who is Culper? We don't. All you need is Doug, man. That's all you need. All right. Anyway, I still like this one. Don't short it first thing. You can't underestimate the squeeze potential here on this one. A couple that I did mention, this red box didn't have any shares, which is probably a good thing because this, man, oh man, is this thing on a benger right here. Still interested in shorting it, but I think I'm a week away. I imagine you're going to see something much like Veru, where it's going to be very stubborn. It's going to pull back. It's going to re-gear. For you guys that are really into the longing thing, you probably could long a nice pullback on this. It's not my flavor, but I couldn't fault you for that one. I wouldn't do it here today now, but if you get a little bit deeper, pull back a base, a flag pattern, you might get another squeeze. Just look at Veru's chart. Backside is what I'm looking for here on this one. I might have wrote one. Oh, yeah. Everybody likes a good joke. Everybody likes a good joke. Here's how crazy this market was. Almost forgot, guys. What the hell? FUV. Look, what? Really? Really? They bought FUV. Of all of the crap you can buy in the market, they bought FUV. I mean, what was that algo smoking? Yeah. I'm going to look for a way to possibly short this one. So anyway, guys, here's what we got. Let's go back and look at the market. Still touch and go. Do not underestimate the power of a squeeze. Whatever you do, it doesn't matter if you long it, you short it, or whatever. Just don't fall into the delusion of thinking, hey, this has to come down. Hey, this market is bearish. Remember what happened last time. I don't think we see 11% here. I don't think the same scenario had, but the market has been doing this over and over again. It's having this repetitive pattern where it's continuing to just fly off the handle with these rallies. So don't underestimate just how far this thing might go. All right. That's all you got to do. Use your stop losses in either direction. Again, if you're short, got to use stops in this market. If you're long, you got to use stops in this market because you just never know how the tide's going to turn. And we'll eventually move out of this excessive volatility and the market will pick a more clearer direction. And I think we're getting close to a bottom, but we still have some things we need to work out. As always, if you need help, make sure you visit Trade with Doug. You can visit my live trading private community. And for those that like the penny stocks and crypto, feel free to join the all free, yes, free penny pound. Until next time, guys, trade well, take care, keep the stops tight. See you soon.